Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Today we're putting the pedal down on earnings acceleration with Kevin Matras, head of our Research Wizard division and top stock screener here at Zacks.com. And it's kind of appropriate that we're talking about this right at the time that second quarter earnings season kicks off.
Right. Yeah, now is a good time to talk about earnings. I think Alcoa kicks off the earnings season tomorrow, which is Wednesday. But it's important to remember.
The 8th of July.
Yeah. It's important to remember that, whether the market is good or bad, earnings indeed are the most important things that influence stock prices. But this earnings season, I would say, instead of just looking at, the quarterly earnings growth, you want to look at the rate of the growth and see how that growth rate is changing from one period to the next.
But these days, are there any companies out there with earnings acceleration?
That actually is a good question, but the answer is, believe it or not, there are companies out there with accelerated earnings growth. What's interesting is that I ran some studies, and this has been documented with other people too, but studies have shown that almost all of the most successful stocks in the past have shown accelerated earnings before their most impressive price moves. So this is definitely something you're going to want to look at. What's interesting is that sideways percentage earnings growth, right, whether it be strong or not, or decelerating percentage earnings growth, this oftentimes can be a precursor to, let's say, a company that is slowing down. Maybe you're getting ready for consolidation, or worse, that could be preceding a potential price decrease. So I think looking at the percentage growth rate, is that growth rate growing from one period to the next? That's very important. So for example, if let's say in the previous quarter, your growth rate was 10%, but then in the last quarter, your growth rate was 8%, and then in the projected quarter, the growth rate is going to be 6%. You're still looking at growth, but that is decelerating growth. That is not accelerating growth. However, though, if you see, let's say the previous quarter was 10%, the last quarter was 15%, let's say the projected quarter is 18% or anything higher than that, now that is accelerated earnings growth, and those are the companies that we're going to try to focus on in today's screen.
Interesting. All right, set it up for us.
All right, let me go to the slide. What we're going to want to do is we're going to start off by looking at companies where their percentage earnings growth is increasing. So I want the last two quarter-over-quarter EPS growth periods to be greater than the previous periods, and I want the next projected quarter-over-quarter EPS growth period to be greater than the previous period as well. So here's how it breaks down. I want the EPS percentage growth, Q minus 1 over Q minus 2, to be greater than the EPS percentage growth Q minus 2 over Q minus 3. Now we're looking at the last period. I want the EPS percentage growth Q0 over Q minus 1 to be greater than the EPS percentage growth Q minus 1 over Q minus 2. Now we're looking at the projections. I want the EPS projected growth rate Q1 over Q0 to be greater than the EPS percentage growth rate Q0 over Q minus 1. Now, for those people who use the Research Wizard, let me show you what that expression would look like. You would do this in the calculation expression feature. So let's just have a moment of silence so people can see how that expression looks.
Right.
Here we go. All right. The screen finishes up, though, by only applying these parameters to companies that are trading over $5 a share and that have an average daily volume of 100,000 shares or more.
I actually thought we had gone to chemistry class while you were doing that. I thought we were just doing something totally different there for a minute. All right, so how many stocks came through this week?
I believe there was like 33 stocks that came through the screen. Let me give you a couple of them right here.
Yes.
We had APDI, American Dental. We had Concur Technologies, Cooper Tire and Rubber Company, Flowers Foods, and SRS Labs. Okay. So I would say with earnings season upon us, when these companies report their earnings, take a look at the growth rate. Is the growth rate better this period in comparison to the last period? Is it getting better? Is it getting worse? Take a look at this, but also take a look at what those new projections are going to be for the future quarter. And again, it's important to remember like we said earlier, that accelerated earnings typically appear before a stock's most impressive price advances. So these are definitely things you're going to want to look at. These are great companies to put on your radar screen, and this is something you may want to start incorporating in your screening on a regular basis.
All right, and if you want to take a look at some of those other stocks that came through the screen that Kevin did not mention this week, get on over to Zacks.com's homepage and click on the headline right next to Kevin's picture, and it could be updated because it's kind of old. I just wanted to let you know that, but it's a smiling picture of Kevin, and it'll take you, when you click on that headline, it'll take you right to this text version of this piece. With Kevin Matras and the screen of the week, Earnings Acceleration, I'm Terry Ruffalo.